This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it is the Oracle of Northern Utah. He is Robb Reinhold.
Well, thank you, Patrick. And Oracle, again, these are just keep getting better and better. I don't even really know what that means, but I know it doesn't sound derogatory, so I will take it.
Yeah, I'm not 100% sure either, but I did think it sounded good. Now let's move on to this episode. So, you guys kind of seen the theme of what we're doing lately. We've talked about all the major concepts there really is out there in trading psychology, at least ones that we're really aware of. So what we're doing now is talking about specific instances, specific things that maybe have happened to you or a certain mentality you might have. I did this in my book, separate them all into instances, and I was just hoping that they would hit. You know, like if I have 18 of them, 3 or 4 of them hit with you, and then you always have something you can go back and reference. And so we're going to attempt to do that today, and we're going to do it by pointing out, and this will be part 1 of a 2-part series. So, Rob, I'm not sure how long this is going to go, but it's going to be a 2-part series talking about the things we notice with our traders that even though they should know better, they just don't. And how do we, 1, identify it, and 2, overcome it?
Wait, we're doing this to help people? I thought this was just us coming on and airing our personal grievances.
In a perfect world, I think we could just do that ad nauseum for like 2 hours. I think it would be great theater. But we got to keep our eyes on the prize here, Rob.
All right.
So what we are going to see, I have 1. Rob has 2, and then I'm sandbagging 1 for next episode, and I think Rob's got a couple as well. But it is kind of hard to believe, though, Rob, at your level, at prop firm traders, even prop firm traders who have been there 3, 5 years, maybe even longer, they're still doing things that irritate the crap out of you. Is that true?
Yeah, that is true, because all of us are never at the finish line. I mean, it's always a work in progress. I definitely have to deal with them much, much less than I do a newer trader. But those issues still always creep up a little bit.
And when they do they typically come to you with it? Or is this something you notice from afar and are able to kind of recognize it and diagnose it and approach them?
No, it's definitely usually they come to us saying, hey, I've got this issue, I've got this issue. Every now and then, yes, I'll reach out to someone and some of these will come up in our discussions. But for the most part, we always like to have some active dialogue with our traders.
Okay. So on that note, go ahead and start us off. Like I said, we'll do a little quick rotation here. And this doesn't have to be your number 1, but just the first one you care to discuss today of an issue that still happens with your prop traders that just bugs the hell out of you because they should know better, especially at this stage.
Oh, this is my number 1 for sure. This is the number 1, and you're going to hear it in my voice. And look, whenever I'm having a discussion with a trader and they're saying something, I'm listening to them, trying to calculate or contemplate what they're saying. If I hear them say this, I immediately, completely override them, completely butt into wherever they are in their sentence. And I say, absolutely not. You cannot say that. And it is the phrase, I know. Again, they could be talking about something, and the second they say, I know, the discussion is over. Well, it's not over, but it's on hold. Because those words are the most dangerous words a trader can say to themselves. We've talked about this in one of the other episodes, and the saying that we brought up was, you don't know shit. And so that's what I say. When a trader says, Rob, I know, boom, I jump in, whoa. You don't know shit. That's the number 1 pet peeve of mine.
So, okay, well, give me some context here, Rob. Like you might say, hey, it's a nice day outside, and I say, I know. Now, that doesn't mean anything, but when they say, I know, what are they referring to? What are the other words around this sentence? What exactly are they saying, I know about, that irritates you the way it does?
Right. Thanks for asking that question because, yes, I did not narrow this down. When a trader says they know something is going to happen in the future, that's what I'm talking about. So they'll say things like, Rob, I know it's going to bounce at support. Rob, I know that it's when the McClellan oscillator gets to a negative 37, I know it's not going to go any lower. Whenever they say they know something that's going to happen in the future, I jump over them and say, absolutely, you cannot say those words. And it's not just because I'm trying to be a jerk. When you say those words, your brain does something different with those words than with words like I think, or odds say, or most of the time. Those are different phrases, and all those phrases are okay to use because it gives your brain this idea that, hey, you know what, it's not a guarantee. There could be some situations where it doesn't do it, so I should probably start to plan on those situations. When you say I know, you have completely eliminated all the other possibilities that are real possibilities, and you don't spend any mental energy thinking about them because they don't exist in your brain. That's why I just am so serious about this. The second you say I know, your brain eliminates all those other possibilities that are real possibilities, and you no longer need to think about them or even consider them. That's why those words are so dangerous.
I mean, this almost sounds absurd to me because especially somebody who has experience, why would they say, I know it's going to bounce off support? Have you not seen support fail enough times in your career to where you stopped speaking in definitives? It just doesn't make a lot of sense to me. It's almost like a rookie mistake. Somebody will come up like a price action trader or somebody who's trying certain indicators for the first time, let's say like a moving average, okay? And they're getting killed in a short, but they're like, well, I know that at some point it's going to come back and regress to the mean, which means it's going to come back and touch that moving average. I'm like, well, yeah, but do you know how high that moving average can go before that happens? You'll be completely wiped out. Now, that person's not wrong. There will come a time where price will come back and touch that moving average. But they're missing the larger picture here. That part I could almost excuse. A situation like you're talking about, Rob, I mean, tell me, why do you think this is happening? Why do you think this is such at least the way you're describing it, maybe I'm missing something, it's just such a boneheaded mistake to make in your head? Why are people, professional traders, 3 years in, making mistakes like this? Let's break it down some.
That is a great question. And one little wrinkle to this is that most of these conversations where I get the I know, they are also risk management calls to where a trader is in a tough situation, where their back is against the wall. Now look, they've done other trades perfectly great, and they've stuck with their stops, they've done everything they should, but they've blown this one. And they've got a risk management call. So when I call them and be like, hey, what are you doing with this position? You've really effed this up. They don't want to get out of that position because now it's a bigger loss than it should have been. And the fact that they haven't gotten out of it yet tells me that they're stuck. And I don't know if we've ever used that term on this podcast, but I call traders all the time and said, look, I know you're stuck. I've been stuck myself. I get it. I understand it. When you get stuck in a trade, you literally just can't get out of it. You know you should. Everything in your training and everything you've read and studied tells you should. You know you should, but you just can't do it. And so you have to then go into your technical analysis and find some justification for why you have broken your rules. And then you grab onto whatever that is and you say, oh, this is how I can still stay in this position, not take the loss that I should have taken a while ago because of this, whatever it is. They pull a rabbit out of the hat. They pull a McClellan oscillator. They pull a Williams, whatever. I mean, they'll pull anything out of a hat. And it's all because they've put themselves in a situation where they now have to justify their bad behavior. So I'm glad you asked that question. Most of these times it happens on a risk management call. Very rarely will it just be on a random trade. They're like, oh, it could win, could lose. They never say, I know about that. It's always when they've blown it and they need to justify their bad behavior.
So, if it's okay with you, Rob, I want to take this even deeper because now I'm getting even more fascinated about this because what you kind of said before about how they feel stuck. Now, let's tie this back over to people who are maybe just home traders, for example, because I think there might be parallels to this mentality. So stay with me here. You hear a lot of people who, quote, lost their ass in the stock market. All right, now we all know stock markets go up for a very long time, and then they take the elevator down. But it's not a bullet train elevator down, if that makes any sense. You usually have time to get out. It's not one daily candle that just goes all the way down to the bottom. There's a point in time where all these people who, quote, lose their ass in the stock market, they were down, 30, 40, 50%, and they had decisions to make, and they probably should have cut their losses and reaped at least half of their bankroll back. But they stayed with it. Even if we're talking about something like Enron, for example, that was just embodied in a huge scandal. Like, what is going on with these people? Why do you think they allow themselves, one, to get stuck, two, will not allow themselves to get unstuck?
It's a great question, and I think that would be a great episode because there are a lot of reasons. And for you to understand like the psychological reasons, I also use the term deer caught in the headlights. You're the deer caught in headlights to where you don't move. The car's coming right at you, but yet you're in this situation where you can't move. Getting stuck, it's got a lot of reasons to it. And I've been stuck before. I remember back in the days, I was stuck. My phone.com trade that I think I've talked about on this podcast, I got stuck. I got stuck in it. I literally could not hit the sell button, even though, it was a short, so I could not hit the buy to cover button to save my life. I was only able to be forced out by margin calls. That happened back in 1999. Patrick, have you ever been stuck in a trade?
Yeah, let me go ahead and remind you, I was a penny stock trader before I was a Forex trader. Yeah, that's pretty much the definition of that industry is you get stuck in these trades, and it's up to you just to eat it or to hold on to a little bit of optimism. Whatever, you latch on to whatever's there. But no, you're right. I don't want to go too far with this because I think you came up with a good idea, and that is we should have an episode on this because I think a lot of people can really relate to that. I always wonder how, percentage-wise, how many people can relate to some of the things we talk about nowadays, but I think that's a big one. So let's kind of hit the brakes on that and make a nice smooth transition because mine, the one I'm bringing to the table today, I think has a little bit of the one you just talked about, and I also think it has a little bit of the one you're about to talk about later. So allow me to use this as a bridge. And mine that I've noticed, and I see this more on Twitter, a little bit on Discord, not so much in the YouTube comment section. I think people want to keep this one under closed doors. But a pet peeve that I see is when people deviate from their system because of a very bullish or bearish news event, like a one-off news event. Not something terminal like Enron, not something terminal like the Japanese yen. More so like, okay, if they're in a long, well, there's people talking right now that the United States might have a sovereign Bitcoin fund and start adding $200 billion a year, whatever, to it. And look how bullish that is. I can't take profit on my Bitcoin trade now. I can't take profit on my Bitcoin investment now, even though it's 4x, 5x, because maybe we might have something. I mean, that's pretty major. The United States government is going to buy Bitcoin every year. I can't stick with my system now. I mean, look at this big news event that might happen. So there's that, and then it happens on the other side too. It's like, oh well, we just had the SEC just came after this particular crypto, for example, or war just broke out somewhere in the European Union, or the EU's having an issue with like back with Brexit, things like that. These one-off things, and they justify this as a reason to just sit there in that trade or that investment for freaking ever. There is no end time to this, and I don't know. this is how they justify it, and it absolutely drives me crazy. Do you have any experience with this at all, or is this just me kind of talking to myself in my own head?
No, I've got plenty to say about this. I'm going to go all the way back to late 1999. Late 1999, we had, the dot-com bubble. Now, of course, it's very easy to look back and say it was a bubble, but at the time, look, it was pretty clear it was a bubble, but not everyone believed that, so I'll give people a break on that. Things were foundationally changing. And just think about how big of a change it was in society. This is like a once-in-a-lifetime kind of change in society. And so these stocks that people were buying, that were doing revolutionary things, it was amazing. And the stocks went up, 1,000%, 2,000%, 3,000%. And there were a lot of people that never sold. They never, ever, ever sold because of this belief that this was going to change the world. And now they were right. But guess what they were not right about? They were not right about their dot-com company ever being able to be profitable. And so they allowed this major shift in technology to basically override sound trading and investing principles. Now, we see this a little bit in AI. We've seen it in some other areas. Look, the whole point is you follow your plan. And anything that causes you to deviate from that plan is a mistake. This is just one of those mistakes that can happen where something, a one-off is a great example of this. Just some big news one-off happens, and all of a sudden, you bail on all of the hard work you did to put into building this trade. You just bail on it because of this news. And what happens is sometimes that news works and sometimes it doesn't. And then what happens is you get stuck in those trades. Those are the trades you get stuck in because you can't admit, now I should go back to being a good fundamental trader and follow all my rules. You can't go back to that because you already blew it. So now you got to justify why you're staying in it. And in 2000, we saw people ride millions of dollars back down to the zeros. And then that just happens on these kind of things.
Yeah, this is why it ties into what you said before. That's exactly what I was thinking. And I think what really irritates me about it, and I don't like saying it in these words, especially in my Forex material, but especially because I know where a lot of traders are starting from. But this is such a scarcity / poverty mindset. This should not be your 8 Mile. This is you're treating it like this is your one chance at riches and greatness. And it should not be. You should have a lot of irons in the fire when it comes to trading and when it comes to investing. Okay, maybe if this is the only trade you have on right now, okay, you know as well as I do, if you're a Forex trader or a crypto trader or a stock trader, there's going to be another bust coming probably tomorrow, if not 2 or 3 days down the road. People are treating this like their one and only shot. And that's what I think really irritates me, is they haven't figured out that it's really, none of this is about anything. None of this is about that at all. Trading is all about distancing yourself away from this whole one shot, one kill mentality.
I remember as a young trader, this is like back in 1997, 98, I was watching this new network called CNBC. So again, the stone ages of trading. And they would always interview this guy. He was in the pits. He was in the trading pits. And, everyone's yelling and screaming, and they put a microphone in this guy's face, and he's like, oh my gosh, I've never seen this kind of carnage. This is the worst thing I've ever seen. We're selling everything. And I'm like, oh my God, this is crazy. And then literally the next day, they talked to him, put a microphone in front of his face, like, you know what, I'm feeling pretty bullish at the moment. I think things are rising. And I'm like, what? What just happened? But as a young trader, I didn't have the experience to understand that everything's cyclical. And one of my favorite people in the world, and I'm glad he is still alive at this moment, is Art Cashin. He's my favorite guy on CNBC. Art Cashin has been there since like 1950. And I remember during the financial collapse of 2008, I had never seen anything like that. I was like, oh my gosh. Like, I've been trading for about 10 years, and I'm like, oh my gosh, like, is capitalism going to survive this? Are the stock markets, is every stock going to zero? Like, we didn't know what was going to happen. And I remember they brought on Art Cashin. And he was cool as a cucumber. And he said, you know what? This happened in 57. This happened again in 63. We saw it in 82 and 87. You know what? Yeah, it's going to be ugly for a while and then it's going to bounce back. And that gave me some calm. I said, oh. And I also was reading a book called A History of Panics, Manias, and Crashes. Boy, that is not the right title of the book, but I'll get the right title here in a second. And it's a book about all the crashes that happened over the last 500 years. And do you know what I learned when I read that book? It was just temporary. That was it. Yeah, now sometimes it lasted 20 years, but in the grand scheme of it, it's all temporary. And as now I've been doing this for longer and longer now, it's much easier not to react to those news events because you understand once you've lived a long life, like everything, you've seen everything happen and you realize there's no reason to overreact to any of it. It's just normal cyclical behavior.
All right. Well, Robb, if I'm going to ask permission to do this, but may I take you to task on something here in front of all of our wonderful podcast listeners?
Absolutely.
Okay, so this is something that you and I talk about off camera. People listening right now might not know, but in terms of our outlook on the overall economy, which it's just our opinions, take it for what it is. I am in the hard landing camp. Robb is in the no landing camp. So given what you just said, Robb, and all these things we're hearing right now, just the fact that the word no landing has even being floated around right now, and these quotes like, oh, the government has made recessions illegal, and we are approaching the AI revolution. This is all textbook, top of the market talk. And we get so caught up in these words and phrases sometimes that it isn't until after everything already crashes we look back, just like we did with the dot-com boom, and say, oh, yeah, but we forgot this one really important thing. Those stocks weren't worth anything. They were selling market share. They weren't giving actual money to people. They were giving market share, and it was absurd. But the idea at the time sounded revolutionary and sounded brilliant. And then only when it goes all wrong do we kind of finally see the absurdity of the whole thing. So to me, it seems like that's what's going on right now. Are you not seeing that? Do you think that that these sayings actually have weight and it's just going to be up only? Because that goes against a lot of what you were reading that book and a lot of what your guy was saying.
I absolutely love this question. I got a big grin on my face over here. So I just talked about that maniac in the trading pit who had flipped from super negative to super positive in a day. And I remember thinking like, oh my gosh, this guy is insane. No, he's not. He's exactly right. And so this is where I am as a trader, is that when the data says to be bullish, and be as bullish as the market says to be. Right now, markets are going higher. And guess what? I'm very happy enjoying the ride. But I've got technical indicators that when they turn, I turn. And you will hear me sing a completely different song when the technicals have turned. So you're not taking me to task at all. I'm just reading the data that's in front of me right here, right now. But I promise you, I will turn faster than you could ever believe. I will be that maniac that was the most bearish he's ever been one day and the most bullish he's been the next day. I'll be that maniac because that's how you trade.
Okay, so it's not that you just don't think there's not going to be any kind of landing at all. You just don't think there's going to be one right now or in the near future, and that's why your chips are where they are. And as soon as that changes, you're going to change with it, right?
Yeah, and the market is betting on my position at the moment. And the second it's wrong, it'll turn. And guess what I'll do? I'll turn. My only bias is to be on the right side of the market. I have no stake. We have a saying in Maverick, we want to be market agnostic. You're market agnostic. You're not hoping for a bullish market, a bearish market, or anything market. Your job is to be on the right side of the market, period.
Okay, good to know, because when you first told me you were in the no landing camp, I'm like, this guy has lost his mind. Okay, good. No, much.
Look, I'll be in your camp at some point. Again, like I said, I will be that maniac in the pit where one day you'll talk to me about it and then we disagree. And then a week later we talk and I'll agree with everything you said.
And for clarity on my end too, I'm not bearish right now. I think something is certainly coming. Everything is in place. I also know that it always happens when sentiment is at its highest. It never happens when people are dooming and glooming. It happens when you finally have shaken those people out. So whenever that day comes, that's when you should really be careful. And yeah, I announced this on my own investing podcast in the spring, when I entered a QQQ trade. I'm like, look, we know things are coming, but they're not coming now, and there's every reason to be bullish. So I've been in QQQ ever since, and I have zero regrets, and I'm hanging on to that sucker.
Patrick, this reminds me of several times, and I totally agree with you. In my life, where I'm like, oh, the top is close. Like when a cab driver starts telling me about all these investments that I should be making. I remember that back in like late 99, I was in New York, and the cab driver was telling me about all these tech stocks that I should be buying. And I'm like, oh my gosh. Or like the bagger at the grocery store was telling me about it. Do you remember back in, I want to say it was like 2006, that people were refusing to be paid in dollars and they wanted to be paid in euros? Do you remember that, Patrick?
I remember some actress came out and said, pay me in euro. And that's all I remember. And in my mind,
Yeah, there were some actors, and there were some models. They were like, no. So where do you think the absolute bottom of the US dollar was?
It had to be right there because, yeah, even I was looking at that at the time. I was like, dumb. Yeah, don't ever, no.
That's a great sign. If you want a good sign of when the tops and bottoms are, is when, I'm just going to say it, when your dumbest neighbor starts to give you financial advice. That's the top and that's the bottom.
Yeah, and it's so funny because in crypto right now, you see condensed versions of this, and they always hold true. Whenever you get a big run in meme coins, you pretty much know that the end is near because, well, honestly, it's kind of weird now because usually back in the day, only dumb people were in meme coins, but now it's pretty much just OG crypto people who are bored and are looking for some alpha that get into meme coins. But either way, that usually signifies a top. Usually when celebrities come out with their own coin and for some crazy reason it actually does really well, things like that. And when mainstream media starts talking about this paradigm shift that we're having now into a digital world, again, that's great and all, but it almost always signals a top. And I want everybody to be very careful about this. When you start hearing these really ultra bullish things on the future, call me a conspiracy theorist, Rob, call me whatever you want. I think that is big money saying to everybody, we are getting ready to dump on you. And we want that last little push so we can go ahead and do what we need to do.
It doesn't matter why it happens. The fact is it happens. But I want to bring this full circle back to your point of not overreacting. Because, again, these are all cyclical events. And for you to throw out your hard-fought system for any of these reasons is a mistake. It's just a mistake. Yes, things are going to happen. There are going to be ups and downs, but you should just keep doing your thing. You spent the time and effort to figure out what your little niche was on how you were going to trade. Just stick with your thing. Just stick with it. And sometimes, I remember, at the very end of the tail end of the .com craze, I started to become cautious. I started to take less trades. And I felt like an idiot for about a month because everyone else was making all this money. But all my indicators, everything was telling me, lighten up, lighten up. You don't want to be too heavy, be very nimble. And I was really happy with it that I stuck with it. So it's just stick with your system, stick with all the work you put in. And yes, at times you're going to look dumb, but I promise you at these moments, that's closer to the top and bottoms than any other time.
Yeah, and look at the bright side. At no point in time are Rob and I ever telling you to take everything off the table. We're just asking you to scale out like a normal, rational trader does, like a normal, rational investor does. So you still have a lot of upside potential here should this prediction be right. But if even taking half off or a third off irritates you to where you don't want to do it, again, you are trading like you're poor. I don't care if you are poor. you're not going to trade like you're poor, because poor traders don't make money. Full stop. You got to do it right. You got to do what the rich people do. And we're doing our best here. All right, Rob. So let's go ahead and transition. So if we've gone so far off the reservation here that you've forgotten what the last one was overvaluing very bullish or bearish news events and not getting out of your trade, or scaling out of your trade, I should say, as a result. And so this one, I think, transitions nicely into your last one for this episode. And go ahead and fire away with that one.
Let me really share with you how long I've been trading, because as I've said, I traded in the Stone Ages of trading. Had one monitor, a 14-inch monitor, and to add another monitor was like $1,000 just for a dual memory card. It was crazy. It was crazy to have two monitors. But when I started out, there was no such thing as a stop order. There was only market orders and limit orders. That was it. Those are the only two orders that you could possibly put in. You could put in market or limit, and you could do good till canceled or good for the day. Order entry was very, very simple. Very simple. That's all you could do. So there was no way to put in a stop order. Now, there was the concept of a stop order, and everyone understood the concept of a stop order. And so we, obviously as traders, like, okay, if it goes down below 50, I'm going to cut it. But you had to have what we called a mental stop, because there was no actual stop order to implement that. You had to have a mental stop. Boy, that's the biggest lie that we've ever told ourselves as traders. The biggest lie is that I'll get out if it breaks 50. Now look, you'll get out most of the time when it breaks 50, but I guarantee you, absolutely 100% guarantee you, you will not get out every time, because all the psychological stuff we've talked about in this podcast, they'll all get you. Every single little one is going to get you. Greed, fear, what happened in your last trade, what happened in your last 5 trades, what's happening in your personal life. It's all going to affect you at that moment. So my biggest pet peeve is when I look at a trader's account, I see positions that are not limited risk positions, but positions that have lots of risk. And I'm like, hey, I don't see a stop. Where's your stop? And they tell me, don't worry, Rob, I got to stop here. And I'm like, where is it? Why isn't it in the system? Why is it not in the system? And they say stuff like, well, I don't want it to come down, and have a wick on that, at that $50. Let's just keep that $50. I know if it might go down a little bit below 50. Oh, there it is. I know it might go down a little bit below 50, but it's going to pop right back up. So I don't want to have an actual stop there. No. Have the stop in there. That is your best chance to actually follow your system. So that's my second biggest pet peeve, is people that tell me or think that they're going to get out at a certain point and think at that moment, with all the stress, with all the prior things that happen in your trading, that you're going to do it 100% of the time, because that is just a flat out lie.
This is such a good one. And you said it before I could say it. This mentality right here opens up the gates of hell for every single trading psychology issue one could ever have. This, what you just said, enables the absolute worst of human trading psychology. Something like this, having a mental stop. And it's so funny you said, the reason why they didn't want to get wicked out. Okay, yeah, fine. Well, here's the funny part, is before a wick forms, a big, huge bearish candle forms first, or is forming. And that might be all you see. Now what are you going to do? You don't know that's a flash crash. You don't know that's just going to be a wick down. That could be the beginning of something far worse. So what kind of decision are you going to make there? Are you going to be in the right headspace to even make a decision like that? Probably not. So just, God damn it, let the system do it for you. That's why it's put in place. And it's funny too. Like, I'm disappointed that this is happening with traders. I feel like this would not happen to most traders, because if it did, they're not going to last. They're going to have their accounts blown out. They're going to quit. I think people who have been doing this long enough trading should know to never, ever do that. However, the investors out there, and I know there are 10-Minute Contrarian investment podcast listeners listening to this episode right now, and let me tell you, I will bet half of you motherfuckers are doing this shit right now. You have mental stops on the investments you have because you're so long-term bullish on them that you're probably just going to stay in them no matter what, that you have absolutely punted any kind of sound money management along the way. Even if you did what I told you to do with take profit, write it down, put it on a spreadsheet somewhere, I'll bet you half of you don't even have a stop loss cemented into any of your investments right now. I will bet that's the case. And if anybody wants to come out and say it in the YouTube comment section, if you have the balls to do it, go ahead. But Rob, if I had to put money on it, I would put the over-under at 50% of even my investors who I drill this into their head. I'll bet they don't even have a stop loss. How do you think this pertains to investing? Do you think it's better or worse?
Before I jump in to answer that, I love what you said, and we need to, again, we've talked about putting trading shirts, trading merchandise out there, opening up the gates of hell to everything wrong with trading psychology. It's so true. It's so true. Not having a hard, fast stop in there, you are opening up the portal to hell of trading psychology. That's what you're doing. And it's going to get you. It's going to get you every single time. You will absolutely get stuck in these trades. There's just no way it can be any different. That's just a guarantee. All right. I actually forgot what your question was, so remind me real quick.
No, that's okay. Yeah, so we're going to add to our merch collection. We have a shirt that says "Work hard, trade harder," and then we have our "Open Up the Gates of Hell" shirt. Cool. We got two. That's a good start. Now, my question was, do you think people are making this mistake even more so with their actual investments as opposed to their trades? Because there's such a more kind of laxed discipline with investing than there is trades, because with trading there absolutely has to be, or else you're going to flame out right away.
Yes, and there's actually two reasons for this. Number one is you typically put in more time, work, and effort into choosing an investment than you do a trade. So, and we've talked about this in previous episodes. Let's say I, as a trader, spend 10 hours researching one company. I go through, I know all the names of the CEO, the CFO, I know their pedigrees, I've gone through all the company reports, I've gone through all the consumer reports, and I know everything about this company, and I've determined that it is a great investment. When I click that button and I get in, I now have a lot invested, and I'm not talking about money. A lot invested in the success of this investment. Now, if I then go out and tell my neighbor, hey, you should get into this, I've done all this research, you should get into this too, and your neighbor goes out and buys it, you now have even more investment in this being good for you. And now you got your neighbor. If you have a big platform like VP does, and he tells everyone, hey, you should all buy this, talk about absolute investment in this trade or investment, whatever you want to call it. You have now made it so absolutely difficult for you to recognize and realize and admit that you're wrong, because now you've got a lot riding on it. For any of you that saw my Flat Earth Trading Society, one of the best things about that experiment was I was flipping coins. I was doing Scrabble tiles. I had no idea what some of these stocks or positions even were. All I knew was they were a symbol, and you flip a coin, you go long, you go short. That's it. All of a sudden, it makes it very easy to admit you're wrong because you don't have all of this invested. So I think the more time and effort you put into a trade or investment, the harder it's going to be for you to be able to put in a stop and admit, hey, I might be wrong at this point. And I think with investing, you tend to do a lot more research before you would looking at dollar yen on a 1 hour chart. You know, that's a pretty quick decision you could make. But investing for something over 3 to 5 years and doing, some buying along the way, you have put in so much time and effort. It's going to be it's going to be so hard that why would you even put in a stop? Because you're so sure about it. You've got so much invested. So I'm 100% on board with you on this.
So I want to see if you're also 100% on board with what I'm about to say here. And here is the one exception I will say to what you and I both just got done saying. And you have to do this a specific way. But with crypto, all right, I feel like you can approach this a little bit differently because of the absolute asymmetry, because of what these things could be, not just from a currency standpoint like Bitcoin, but from a company standpoint, right? If you, and we know how volatile these things are, and things can go down 30% for absolutely no good fundamental reason, right? So if you have your allocation to crypto spread out across enough of them, I think in certain situations, like with me, mine is with Bitcoin and Litecoin. There's a finite amount. I think that makes it completely different than everything else out there, and I want to see where this goes. So the money I have chosen to allocate over there is just simply going to stay there. And because my money is spread out into so many other different tokens as well, I really don't care if I lose that money. I don't care if it does go down to zero. Now, I don't hold the same thoughts with my actual stock investments. I practice insanely good money management there on the downside and the upside. But sometimes with crypto, and especially in those two situations, I'm actually letting those two ride. And I've publicly said this. And I feel weird about it because I preach this other thing over here too. Do you think given the situation I've drawn out for you, or given the scenario I've drawn out for you, Rob, that it's actually okay to do, or do you think I'm being a big hypocrite? If I'm going to do things one way, I should do them that way across every investment category, no matter what it is?
Not at all. Not at all. Look, on a long, everyone has a stop at zero. So everyone technically has a stop. On a short, you don't. On a short, you can lose more than 100%. But on a long, everyone has a zero. And in my world where I do a lot of options trading, we position size options spreads and options positions for max loss, meaning zero. Like zero is the stop. We're saying we're going to invest $1,500 in this, and the worst it will be is a zero. That is our absolute stop. So it comes with a built-in stop at zero. As long as it fits within your plan, as long as it fits within your allocations of money management, and you say, I don't have too much in any one of these positions, you have a stop at zero, and you just have to clearly define that in the beginning, which is exactly what you did. My stop loss is zero on this. So because it's zero, I'm going to make sure that it's a very small percentage of my overall portfolio, because I realize that zero can happen, but I think it's very unlikely to happen. So no, it's a very valid argument to have a stop at zero. It's actually the best way to get an insanely big gain, especially on a volatile product like crypto.
Okay. I feel a little bit better now because I do have stop losses on most of my crypto. There was one that went all the way down to zero before I could even notice it. I've done a blog on that. It was a long time ago. But I've had so much, gratefully so much success with crypto that nothing since then has really come down and hit my stop loss. I will admit I came a bit close with Polygon, but thankfully it's back on its way up, so I feel better there. To clarify what I'm saying, I think in the stock market, you really need to have a stop loss somewhere. With crypto, depending on how you do it, you can be a little more fast and loose. If you only have 5 positions, don't do that. If you have closer to 20, you have a little more latitude there, bottom line. So, okay, Rob, I thought this was going to be a 20-minute episode. It's gone 46. Say a prayer for me when I edit this tomorrow. But are you ready for part 2?
Yeah, absolutely.
Well, until then, thank you, everybody, for joining us here on the Trading Psychology Podcast. And Rob and I will see you for part 2.
Goodbye, everybody.